Hello and welcome to the day ahead. It's March 22nd. I'm Nadine Blaney. Let's get straight to it. Wall Street ended on a sour note after FOMC Chair Jerome Powell vowed aggressive inflation action, adding to ongoing uncertainties in Eastern Europe, which show little signs of resolution. Defense and energy stocks were the only green shoots, with the broader indices snapping that four-day winning streak. Investors are now weighing up the next move from the U.S. Federal Reserve after Chair Powell said if we conclude that it's appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. Fed funds futures now imply a close to 61% chance of a 50 basis point hike in key interest rates at the Fed's next meeting in May. That's up from 52% before the text of Jay Powell's speech was released. Meantime, oil continues to surge amid reports the EU is weighing up whether or not it will join the U.S. on banning Russian oil imports and fueling further concerns of supply issues. Stock specific, Boeing shares took a hit after one of its 737 aircraft operated by China Eastern Airlines crashed in southern China with no apparent survivors. Meta Platforms, meantime, has been labeled as an extremist organization by a Moscow court, sending its shares lower. On the flip side, Alleghany shares surged over 24% after Warren Buffett's Berkshire Hathway struck an $11.6 billion deal to buy the owner of reinsurer Transray. Nike shares also higher in after-hours trade after third-quarter numbers came in above market expectations, driven by expanding margins, and that's despite supply chain constraints and inflation headwinds. On revenue, a drop in Greater China was more than offset by gains across the rest of its business. Bigger picture, the greenback gained ground after those comments from the U.S. Fed Chair Jerome Powell, recovering some lost ground after Atlanta Fed President Raphael Bostic called for 6 rate hikes this year and 2 for next, taking a more dovish stance than his colleagues. Elsewhere, speaking at a financial conference, ECB President Christine Lagarde said that the European Central Bank and its U.S. counterpart would be moving out of lockstep when it comes to the path of policy. She said our two economies are in a different place in the economic cycle and therefore won't be running on exactly the same rhythm. Both the euro and cable slipped, while the Japanese yen tanked to its lowest level since February 2016. In the cryptoverse, Bitcoin continued its move downward to just below that 41,000 level, though it has had a bit of an uptick in the past little while. Let's look at expectations for the local open, and SPY futures are pointing to an 80-point rise, or about a gain of 1%. Aussie shares settled slightly lower on Monday after volatile trading as China's central bank dashed hope for an interest rate cut and the war in Ukraine raged on. The market yesterday closed down 0.2% at 7,278. That's after hitting a 20-month high earlier in the session. Now, the tech sector and miners outperformed, joined by energy at the end of the day as oil prices rose. All eyes, though, again today on China tech to see how those names perform as the country continues to grapple with COVID.
Regulatory risk in China. There's also major macro risk in China right now. And then you have the regulatory risk that's coming from the US side with respect to the ADRs. And then you also have the sort of COVID risk in China, where China is really struggling to figure out how to open up and move beyond zero COVID. So I've been covering China for 20 years. I can't remember a time when there was so many different things going on. So, I'm not tempted to step in and buy here. I think the risk reward, they could go up from here, but I think the risk reward, you'd be better to wait and have more visibility on what's going on in China before stepping in.
Looking to the day ahead, it's a pretty quiet day on the corporate front as far as we know right now, though we will be watching for the ANZ Roy Morgan weekly read on consumer sentiment, with the Prince Inflation Expectation Index key. RBA Governor Philip Lowe will be making an appearance at the Walkley Business Awards, though no details on whether he will be making a speech. I believe it will be a Q&A session. Across the ditch, consumer confidence has plunged in the first quarter, touching its lowest level since 2008, with household financial positions leading the deterioration, largely due to the rapid spread of Omicron. Well, that does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.